Good morning, ladies and gentlemen. Today we're going to be talking about Target, and is it time to buy the stock or time to sell the stock? Kind of giving you the bull and the bear case, where I see support, where I see resistance, and just kind of briefly going over some of the controversy that's going on with the stock. So to start off with, if you've been living under a rock, Target share plunged 2% as market cap down over 13 billion amid Pride backlash. Whichever side you find yourself of this argument, here's my take on it. I don't like companies losing money. I don't like them doing, in my opinion, stupid things that cause retaliation, which then impacts their revenue, which then impacts my investment in them. So for me, it's you do dumb stuff. I don't like investing in the company, especially when they do dumb stuff. I view it as share dilution essentially, because instead of just diluting you through shares, they're just making the valuation of the stock just plummet because of the backlash they're getting. Whether it's justified or not, it doesn't matter, guys, because the stock plunged like no tomorrow, which brings us to the chart. The Target stock is from the recent highs down to about 18.84%. Do you like 18.84% haircuts? No. So guess what? I don't think anyone does. Now, putting politics on the side and all that, I'm going to give you the bull and the bear case for the stock. Now, what's the bullish case? Well, you did have what could be considered a dead cat bounce, or it could be the start of the recovery for the stock. Now, the reason I say that it could be a dead cat bounce is just because you traditionally don't have a big relief rally, let's say, on a non-dead cat bounce. This is pretty small. This is approximately from the bottom of this wick to the top of this candle is about 5% on a move of almost 20%. So it's 1/4 of the move, not necessarily anything to write home about. On top of, if we put a retracement on it, we didn't even reach the 0.236% retracement. So to me, it's more of a dead cat bounce, or even possibly significant A to B pattern on the way down. If we look at an A to B pattern on the way down, brings Target's price to about $96.90. That if we zoom back, that brings us back to the COVID lows. Now, see, this is starting to be a really bad trend, guys, with a lot of stocks that are coming back to the COVID lows. Now, I'm going to briefly take a pause on the bull and the bear case and just talk about price action for a second. Now, when stocks go parabolic, and this is what would be defined as a parabolic stock, where you just went straight up. There was literally no relief, pullback, correction, insert bearish term here, or price structure term here, that showed any structure in the support. So you see, when Target does this big precipitous drop back in May, which I believe was earnings fueled, you don't really have a lot of price structure to support you on the way down. Now, you did find support around the 200 weekly, but now you're below it. You've been basically bouncing around it. And could you have predicted this prior to Target basically having a controversy? And the answer is actually yes. You have a triple top on the stock right here around the $180 mark, give or take $1, and you basically 3 times failed to cross a threshold. You were obviously due for a pullback. On top of, if you just, this is why I talk about go on the weekly, guys. Weekly time frame, weekly time frame, weekly time frame. I can't say it enough. You have a classic bear flag pattern playing out here. So basically, if this plays out, remember the $96 mark, what if this was a massive A to B pattern that played out recently? So that would bring you down to $65.63, which would bring you back to the 2019 lows, where the stock basically undid its parabolicness. And usually with parabolic moves, and I'm actually going to consider this bottom right here as a start, the 2020 start, usually these correct between 68 to 72% of the way. So that would bring your 72% correction or 78% correction to $122.07. Now, that's going to be an important region because it coincides with a previous resistance point that was its basically 2020 all-time high, got rejected, bounced off, broke above it, found support. So that, keeping this in the back of your mind for the bulls out there, that is where I'd be looking at price structure coming back in, because you had a significant movement in the stock since then, and this basically could just create price structure for it to bounce up to new highs. But again, when I say new highs, I mean localized highs. I'm not thinking you're going to get to all-time highs anytime soon, especially if they start dragging themselves through controversy again. Controversy is not necessarily good for stocks. You want basically the NVIDIA style controversy of AI, not the which you want to find yourself in the political spectrum. The beauty about AI, it has no political spectrum of it, so people aren't as let's say, opinionated about it. You have the bears that are opinionated about it, and the bulls are opinionated about AI, but it doesn't, you guys get what I'm trying to get at there. It doesn't wrangle people the same way. Now it wrangles the bears when they try to sell or short sell Nvidia stock, but again, I digress. As you can see with Target, you basically are, my assumption right now, we have to look at what Looks Algo tells us, is that 120 areas where I'd be looking around for some support structure. Now, again, if this bear flag plays out to A to B, B to C, remember, it completes down at the $68 mark. That's where you may get the crash leg piece of it. But again, we could have significant price appreciation in Target before that unravels in the market, and there's no real telling when. Now, what is the bullish case that I'm trying to set up here? Well, you're starting to have volume capitulation, and as you can see here, you have this big volume ramp, and now you want to see it's kind of dying down. So you want to see one more big volume ramp to the upside. Similar, Tesla's a prime example of this. If you look at Tesla's chart, it has a big volume ramp when it came into the, came down, and then it had a big volume ramp on the way up. And what do I mean by that? As you can see here, volume ramp, find the bottom, ramping down as it's going back up with bigger volume just calming down. You don't really have that with Target. So Target has some start of a volume capitulation, but I wouldn't classify this as the bottom, especially because there, we talked about, you did fill this gap here. So you guys know my thing about gaps. All gaps get filled in time. That gap is now filled. Now, again, this area right here between the 120 to 111 is where I'd be looking for price structure. This is no price structure. That's just straight up, you're going straight back down. So do I believe Target's bleeding is done? No. There's no evidence of the stock stopping. You haven't made a new localized high. Now, if you go sideways, basically not breaking this body of the candle of $128.56, then there's evidence that you may be trying to create a reversal to the upside. But right now, the stock is in a toilet, aka why the thumbnail, but it could be an interesting buying opportunity. So for the bears, would I be shorting this? No, because you missed the but basically, and there's not a real opportunity to short it. Now you could get the next leg down, which looks about, if we were targeting 120, that's maybe another 10%, but again, the risk to reward is not necessarily there for the short side. Now for the bulls, because you all guys love the bull arguments that we have on the channel here. So the MACD is separated on the daily. So okay, strike one. RSI has not bottomed below the 30 mark here, so that's strike number 2 for a bottom, guys. I'm not saying strikes for the stock, I'm just telling you for a true bottom. And oscillation has not, and you don't have volume to support it, so that's strike 3. So in my opinion, this is not a bottom on the stock. I do think you have more price structure you can go through, and let's just look at the weekly and see what it tells us. So the weekly is telling us at this 111-ish mark is where you have true price structure. So that is one, coinciding with a weekly zone. 2, it would also have a MACD divergence, because if you came down here, MACD probably be still on the high side and making a secondary bottom probably, and the RSI would be oversold on the weekly. So all these things that are basically supporting a bottom in this region right here. I know we have a buy signal on the weekly, but it is not necessarily in an area where price structure would be advantageous to you. Now, it is where you may be thinking about the bullish side. That's why I'm using it as a bullish cue to say, hey, think in the bullish way versus the bearish way to see what the stock could bottom at and where you can get an interesting buying point. Like I said, that 121 all the way to this region of basically 110 is where I'd be looking to maybe value add into your position or dollar cost average into it. That's where I'd be looking. And then if you have to get out, you're only losing a small sum, because if you break this support, if you break, let's say the 107, 106, then you got a nice long way to that $65 price point where there's more price structure down here. And if we just look at the monthly to give us where it may have a bottoming, $87. So again, keep in the back of your mind, you break 107, you're probably going down to the 86. But again, this is all about price structure and areas of price structure on the daily. Again, this is where I'm seeing price structure in that 111, 110, maybe starting even 120, because it could be a pivoting point, and stocks tend to pivot off previous resistance. So keep an eye, don't necessarily get caught up with this area here, because the reversal zone is sitting around the 124 range. So middle, let's say the 120, probably be an interesting point that I may be looking at the 120 mark to get into Target, because even with all the controversy, it's still a massive company. It still has profits. At the end of the day, you're looking at the long run. You're not looking at the singular controversy. And as a bullish person, you should be looking at controversies like this as a good opportunity to buy a company that is not necessarily defined by the controversy, but people are reacting to it. Is the reaction justified? That's for you guys to decide. Do your due diligence on it and determine that for yourselves. Kind of put politics and the 6 inches between your left ear and your right ear to the side, and basically just think of, what is the chart telling me? What are the fundamentals telling me? Am I being basically emotionally attached one way or another with it? Like, for example, if you disagree with the whole controversy, and don't just go short it because you disagree with the controversy. Some other people may find the stock at an interesting buying point. You short the company, get your position completely blown out, and lose money. So not only did you short a company you disagree with, you lost money shorting that company and are just mad at the world. Whereas if you're bullish, you think that the stock is the most amazing thing, and maybe you agree with the controversy or disagree with the controversy. Whatever position you take, stop being emotional about it and look at the chart. So again, that 111 is where I'd be buying if I was bullish. My RSI would be significantly oversold. My MACD would be forming a divergence on the weekly. All things that I'm like, hey, if I get even a more discounted price, let's say I start averaging at 111, we go down to 108, I average down. Hey, that's great. That's more for me to pick up. And I would like to see consolidation in that region. So now what would be some of the red flags for me if I was buying in, and what do I see? Basically a sharp precipitous drop past 107. If these price areas don't have wicking candles to the upside on the close, then I'd be looking at different lower targets, because I need to see that sharp bounce from here. If I don't see that, I'm not looking to see as support, because support shouldn't just be absolutely violated like that. And then again, on the daily, you do have where you have this drop here. Price is going lower, MACD is making higher lows. So we have to keep that in mind. The daily has a divergence, the weekly has a divergence. I would not be going so bearish on this company yet. Keyword yet. Let the chart prove to you that it's bearish. If it's sent through 107, you got an easy run all the way down to at least the $87 mark, and then maybe even that $65 mark with this massive A to B pattern or bear flag that's basically setting up. And again, this is a massive consolidation. Usually these consolidations lead to it's a contraction in the stock, lead to very massive expansion. So Target's price basically in this area is going to expand massively to the downside, I believe, because you've broken out of this range to the downside. Now, you could dollar cost average while you're trying to find those price structures, but you need to have a plan when you get into it. That's what I preach all the time, guys. Remember, earnings are coming up on target for next quarter on August 16th. So remember, E stands for exit. So if you haven't gotten into a position yet that by then and you're nearing earnings, I would not recommend necessarily to drop a boatload of cash on the company unless you have a plan. If you understand the risks that associate with that plan, great. If you don't, and you don't have a plan, don't trade it. Never trade something you don't understand, you don't do the due diligence, and maybe now you guys have a more like unbiased perspective of the stock, where it could be going. I hope you enjoyed the video. If you don't mind, throw a like on the video, it helps the YouTube algorithm, and think about subscribing. We do viewer requested tickers on Friday where we conglomerate all your tickers, weekend deep dives, and I will be keeping you up to date on the market. We're probably going to be covering Apple with its new VR headset tomorrow and just seeing how the stock plays out. I wanted to see a little bit more price structure with Apple, because remember, where Apple goes, the market follows. And I hope you guys have a wonderful day.